Okay, welcome back. I managed to turn off the video there while I was in mid-sentence. So let's go down through it. So the first thing we have is turnover. Now, turnover is just another name for sales, really. And so it's the same as you'd start any profit and loss account, sales less cost of sales. Okay, so we have our turnover, which means sales, and then we have our cost of sales. And in this question, instead of putting in opening stock plus purchases less closing stock and getting your cost of sales to subtract from turnover, we do the calculations in some workings outside of the account somewhere else on the page, and we just put in over here the figure for cost of sales. Okay, so it's the exact same, except we just don't show all the information or the workings that we did in here. And while I'm at it, I might as well say that in this question, it's one of the unusual ones where we're not supposed to show any workings on the face of the account. Okay, so if we have workings to do, we're going to write them in down here so that the person who's marking the question can look at our workings and give us marks, partial marks if we don't get a figure right, but we don't do our workings up here on the face of the accounts. Okay. Also, we're going to just have one column of figures running down here on the right hand side. Sometimes you will see a second column, but it's as easy just to have the one column really. So the first thing you'll have is your turnover or sales minus your cost of sales. That'll give you your gross profit, we see here. Then normally what we have in a trading profit and loss is less expenses, and that's exactly the same as we have here. We're going to subtract the expenses, but we're going to break up those expenses into two different types of expenses. Okay, the first one we're going to call distribution costs. The second we're going to call administration expenses. So it's the same thing as if we just bundled them all in together and subtracted from gross profit to get our operating profit, but we must separate them out. Now, what's the difference between these expenses? Well, basically, distribution costs is short for sales and distribution costs. So anything to do with sales or distribution goes on into this figure. And again, instead of using this as a heading and putting all the other distribution costs in underneath it, we're just going to do some workings down here somewhere, and then we're going to take one figure for distribution costs and put it over here and subtract it. Same goes for the admin expenses. So anything to do with sales or distribution. So advertising, for instance, is an expense that we use to increase our sales, and for distribution, things like delivery expenses. So for instance, depreciation on delivery vans, that would be a distribution cost. So as we go through them, we'll see what goes into which heading, and some of them will be very obvious, some less so, but they're quite lenient then. You'll see in the exams, like you'll see from some of the solutions as we go through other questions, that sometimes in the suggested answers in the marking schemes, they will have put something in admin expenses one year and in distribution costs the next year. So there are some that they give you a bit of leeway on, so don't worry too much about it. Basically then, the admin expenses is if you come across an expense and you can't make a reason for it to be a distribution cost, then it goes into admin expenses. In other words, everything else into admin expenses. Okay, so going down through it, then after that we have our other operating income. So in this case, our other operating income is discount received in this particular question. Now, normally we don't list all the other operating income underneath, but because there's only one this time, we're treating this other operating income as a heading, and then we're going to put in this discount figure over here. Now, usually if there's 2 or 3 or 4 things for other operating income, again, we'll just do the workings down here at the bottom, and then we'll have one figure, and across from other operating income, we'll put in our figure for all of the other operating income. Okay, so other operating income is just gains really, but it's gains from the general operations of our business, not gains from stuff that we do outside of the business as such. Okay, so add those gains on. So all we had was gross profit less our expenses plus our gains, giving us our operating profit. Then here we have profit on sale of land. These are, I suppose, extraordinary items that we put in there, which aren't to do with our general operations of the business. So if we make profit on the sale of land, that isn't something that we usually do in our day-to-day business unless we're in the business of selling land. But you can take it for all of these questions that the businesses are not in the business of buying and selling land. So when you dispose of a fixed asset and make a profit or a loss, that will go in in this section after the operating profit. Then we have our usual investment income. It's a gain, but it's not a gain from our usual operations, of the business. It's a gain from investments we made in another business outside of our business. So that goes in there. Interest payable. So it's our interest coming in, our interest being paid out, and then we get our profit. On ordinary activities before taxation, as we call it. Well, that's like your net profit, really, I suppose. Then you subtract your taxation, gives you your profit after having paid tax. And then that you can do with as you please after you've paid your tax. And how we do it is we pay some of it out to our shareholders. We give them some of our profit, our dividends paid and dividends proposed here. We'll talk about them later. And the rest of it we retain. We keep in the business to use to maybe invest in the following year for different projects or to expand our business or something like that. So this profit that we retain from this year is added to the profits that we've been carrying forward or bringing forward from previous years to have our total profit that we're carrying forward at the end of 2005. Okay.